All right, good morning and welcome back here to Trader Minute. Great to have you aboard. Today we're going to go out and take a look here at the 10 factors of support and resistance as we kind of build here on technical analysis. Okay. Support and resistance is arguably the most important factor when it comes to technical analysis. And also, unfortunately, it's used incorrectly a lot. Could be more factors than 10. In fact, some people argue that there's more. Some people will argue that there are less. But I want to show you these 10 factors and show you how they can be kind of put together to understand where the various supports and resistance on stocks can be, and how to play off of those support and resistance factors. There are many traders out there who simply trade on support and resistance and do very well. No need to kind of muck it up or to get any more complicated than support and resistance in the eyes of some traders. But let's go take a look at these factors. I'm going to use real-time examples. I have a presentation and everything all set, but the examples are kind of old, and I want to go out and use real-world examples here. But these are the 10 factors, and we'll kind of just go through them one by one, okay? But basically, what are support and resistance? I mean, support, okay, basically support is an area or a price where sellers are done and buyers step in. And essentially, a stock will go up off of support, okay? Resistance is a place or a price where buyers are done and sellers step in. Okay, I mean that's really all they are. And a lot of people look, well, okay, support's at 89.22 and resistance is at 89.90. You could get really exact, or you could get into a zone. You can look at some stocks and say, okay, Boeing here, the exact support is 134.22. Or you can say, you know what, we have some support up here at 136. We have some support down here at 130. You can kind of look into zones of support and resistance. And generally, a zone of support or resistance is a dollar or a percent or two of that stock. Okay. The first factor here in regards to support and resistance, and I'm going to use one that AKU and Max are throwing out here, Bed Bath & Beyond. Okay, Bed Bath & Beyond. And this is the most basic concept of support and resistance, is price. And basically, you can see on a chart the level of resistance here on Bed Bath & Beyond, right? I mean, every time Bed Bath & Beyond has gotten to 78 over the past several months, it's failed. Okay, and it's gone up and hit it multiple times. More than a dozen times it's gone up and hit above 78. And so you say, okay, this is resistance. Pretty easy to see, not really that complicated there. And then what's happening? Well, now resistance is breaking, okay? Whenever support and resistance levels break, okay, whenever support and resistance levels break, traders generally expect a run in the stock or some sort of breakout, okay, where in this case we're breaking resistance, okay, kind of where sellers have been stepping in and now buyers are willing to take it higher. Something's changed, right? And generally we can expect some sort of run up. Vice versa, we can have downside price support. Okay, let's go take a look at another one that has been talked about here in the chat, ISRG. Okay, Intuitive Surgical. Okay, and what's happened here with ISRG? We basically had this area down here in this 360 area where ISRG has been finding support. There have been buyers stepping in around 360. Now, there have been sellers coming in around 400, right? So we've just kind of been bouncing back and forth between 360 and 400. And so you can very easily see support and resistance just from a pure price effect here overall. Okay, just from a price effect. Now, this is the most basic concept of support and resistance, the most commonly used, and perhaps one of the weaker aspects of support and resistance. Okay, the market's dynamic, it's fluid, it's ever changing. The earnings for Intuitive Surgical now are different than what they were 3 months ago, 6 months ago, a year ago. If you're going back, and I love when people will do this, is they'll take a stock like Microsoft and they'll go back here, they'll take like a monthly chart and go back here on a year basis and say, well, we have resistance here at 30. Okay, well, yeah, 30, it hit above 30 in 2007, it hit above 30 in 2012, but 30 really isn't any technical resistance. The reason Microsoft's breaking above 30 is because the earnings. There's fundamental aspects that are creating a break of what could be argued as resistance. But to look this long term and to say, well, the market's the same now as it was in 07, or Microsoft's the same as it was in 07, it's a stretch, very tough. And so generally when I'm looking at support and resistance, I'm looking at about a year period, because earnings are shifting, earnings are changing, markets ever shifting, markets ever changing. I can't go back and say, well, we had support back here at 22 in 2006, so Microsoft should find support today here at 22. I can't make those correlations, those leaps, and have any real confidence in those. Okay. All right, so price, the most basic concept, generally good for about a year or so in regards to support or resistance. Now, there are other ways that support and resistance can be seen. Okay, let's take Microsoft for example. Okay, and you'll notice my blue line here. Okay, my blue line. This is a moving average. Okay, this is a moving average. This is a trend line essentially. Okay, and in general, rising moving averages act as supports, while falling moving averages act as resistance. Okay. So rising moving averages tend to act as support, while falling moving averages tend to act as resistance. What does that mean? Well, take Microsoft, for example. Okay, Microsoft, what's happening to the 50-day moving average over the last several months? Okay, well, it's rising. So when Microsoft pulls back, where does it find support? Well, the 50-day moving average. Okay, does it have to find support here? No, but the chances of it finding support at a rising moving average are greater. Okay, what I don't want to do is I don't want to expect. Take a look here in August. I don't want to expect we have a falling moving average. I don't want to expect that moving average to act as any sort of major support. Okay? A falling moving average is generally not going to act as support. It will generally act as a little bit more of a resistance level. Okay? Take gold, for example. Okay, take gold. Gold, the major moving averages have all been falling. Okay, so a move above the 50, okay, above our blue line, not really that significant. Generally, we hit back above or hit back on the 50-day moving average. We find a little bit more resistance than we find support. Okay, so we're not having to keep our price of support or resistance at the exact same level, okay, like with Bed Bath & Beyond, right? Bed Bath & Beyond here, 78, okay? With a moving average, our price level can be dynamic. Notice how Bed Bath & Beyond has been bouncing off the 100-day moving average, okay? Our red line in here. The 100-day moving average has been strong support for Bed Bath & Beyond. Now, is this because somebody is magically buying at this level? No. In fact, as time goes on, these major moving averages have less and less of an effect in regards to support and resistance than what they have had in the past. Okay, you can't necessarily buy a stock just because it pulls back to the 50-day moving average. Okay, a lot of the algorithms and a lot of the trading systems that are out there are no longer using some of these major moving averages. But you could take a stock and let's take Starbucks for example. Okay, and Starbucks, let's go put our blue line. Let's make that a 20-day moving average. Okay, and just notice on the uptrend here on Starbucks, every time Starbucks would come back to the 20-day moving average, okay, it could push a little lower from time to time, but overall it ran up nicely relative to the 20-day moving average. Well, now what's happening to the 20-day moving average? The 20-day moving average is falling. So I would expect that 20-day moving average to be a little bit of resistance. Where before it's been some nice support, now I would expect it to be a little bit of resistance here. Okay. So moving averages, we can kind of use those as levels of support, levels of resistance. Just keep in mind that rising and falling moving averages, tend to act differently. Okay, generally falling moving averages will be resistance, rising moving averages will be support. Now we can take moving averages another step further and go to and add a moving average envelope. Okay, so I'm going to come down here. I'm going to get rid of all my other moving averages, and I'm going to add a moving average envelope. What this is doing is basically saying how far from whatever moving average. Okay, so in this case, the 20-day moving average, how far do I want to draw a line above and below? In a very similar concept to Bollinger Bands, for those of you who are familiar with Bollinger Bands. Okay, so we have a 20-day moving average, let's say 5%. We want to draw an envelope where we have a red line that's 5% above our 20-day and 5% below. Okay. Now, when stocks move, when the price action moves, and it gets, let's say, 5% above the 20-day moving average, notice how Starbucks has kind of slowed down. Okay, jumps up here, July, 5% above the 20. It needs a little rest, needs a little consolidation. 5% above the 20. Yeah, it's not going to happen the next day, right? But it rests, it consolidates. Notice how Starbucks pulled back. 5% below the 20-day moving average. Now it's snapped back to the 20-day moving average. Okay, different stocks will react differently to different percentages. But in general, 5% away from the 20-day moving average, it tends to act as a nice little area of support or resistance. Take Apple, for example, okay, with our moving average envelope. Apple, just because it's 5% above the 20-day moving average, doesn't mean it has to pull back, right? It doesn't mean it's overdone. Maybe with Apple, there's a better percentage, let's say 7%. Are we getting to where, okay, down 7%, it's bounced, down, we can go and change this, and different stocks will have different percentages away from the 20-day moving average where we can say, you know what, this is probably a little bit overdone, or it's probably a little bit overbought and likely to reverse one way or the other. Okay. For Apple, 8% is an interesting level if you're using the 20. 8% away from that 20, it's a little bit overdone. Or 8% below, it's a little bit, the selling's probably getting a little bit exhausting. That's kind of been a model for Apple over time. But you can come in here, you can use a 7-day, or you can use the 10-day or 20. You can model it however you want, see what the tendency with that stock has been, and be able to spot the upside support or downside resistance level, or upside resistance and downside support levels. Okay. So moving average envelopes, another way to look at support and resistance. Now, what are moving averages? Well, moving averages are simply trend lines, right? That's all they are. They're trend lines. And the most basic way to draw a trend line, is to connect the dots, right? I mean, we all did that in first grade, you know, connect the dots, right? Apple has an upward trend, okay, upward trend, should bounce here. We should find support here, right? Because Apple has hit this level several times and bounced up. Is it exact? No. Can we draw our lines just slightly different and get a completely different picture? Yeah. Okay. When drawing trend lines, okay, trend lines perhaps is one of the most inexact ways to measure support and resistance, but it's one that is very commonly used. The problem with drawing trend lines is it really depends on where the lines are drawn. I've seen people send me charts, or they'll look literally like this. They'll have trend lines drawn all over the place and say, well, because of this line, we should find support or resistance in this area. And I say, okay, great. You may be right. You may be right. There's an advantage to drawing trend lines and understanding the different areas, but I don't want to rely entirely on trend lines. Okay, I need to take other factors of support and resistance into account. Okay, so let's take Boeing here, right? I mean, we've looked at Boeing here this morning, and the hourly chart, and what do we have? We have a trend line, right? Okay, we have a trend line. Could we draw it a little differently? Sure. Can we say, well, you know what? Now we had another trend here. We broke it, so we're coming back to this trend line. Yeah, I mean, we could come on here and we could draw lines all over the place and really really kind of guesstimate about where support and resistance levels are based off of these trend lines. I find trend lines to be significant. I want to be drawing them. I want to understand where these trends are, but at the same time, I rarely will make a trade entirely based on a trend line unless it has a lot of other factors coming into it. Okay. So those are the first four: price, trend lines, moving averages, and moving average envelopes. Okay. Basically dealing with what we can kind of see right there on the chart in kind of some of the traditional ways to spot support and resistance. As we go forward here to 5 to 10, these are going to be a little less traditional. Okay, they're a little less traditional. They require a little bit of a deeper look. Okay, let's go to what I find to be the most significant factor when it comes to support and resistance. Okay, the absolute most significant factor are gaps. Okay, gaps. So let's go back, maybe Bed Bath and Beyond. Okay, yeah. All right. And let's come in here to September. Okay, right in this area. And notice how Bed Bath and Beyond gapped up. Okay. Now we can guess why, but notice the volume. Okay. Notice the volume. Well, why do you think Bed Bath & Beyond would gap up like this? Something fundamentally had to happen. Okay, something fundamentally. They either had to announce a stock buyback, a dividend increase, earnings. We had to have maybe they were going to be bought out. There's a million different things that could happen, but something happened here. Okay, something that was very bullish and pushed the stock higher. Okay, well, notice now what's happened to the stock every time it's pulled back into this gap area. Okay, every time we've pulled back into this gap area, Bed Bath & Beyond has been able to bounce. Okay, it's been able to bounce nicely. This gap, there was a fundamental game changer here. There was a fundamental change in the stock. Okay, where it gapped up. Buyers were saying, before, okay, the stock's expensive around 74, 76. Now they're saying, wait a minute, we have a fundamental change. The stock isn't that expensive at these levels. We can buy it here. Okay, and sellers turn into buyers, so we get these gaps. And now all the dip buyers are willing to step back in as these gaps get filled. Okay, generally the gaps will happen on news. Okay, and with my charts, as I go through my charts, and I go through them every weekend, I go through them during the week, and I look at these gap areas. And one of the reasons I like to pay attention during earnings season to understand why these stocks gapped and to understand, can I buy this stock if it ever pulls back into the gap area? Okay. Now, sometimes it doesn't. Okay. Take Facebook. Big gap here in July on earnings, right? So, I draw on my chart. I draw the gap. I say, all right, we have a fundamental change here. Facebook, really, really nice in this area. Any sort of pullback back into this gap area, I'll be able to buy. Well, did it ever pull back into that area? No, it didn't. Okay, it absolutely didn't. It's been too bullish to do that. And so sometimes waiting for a gap to be retested never happens, but understanding where they are, and understanding, okay, we can be a buyer of those, allows us to be able to get in. Take Apple, for example. What's it been doing? Well, we had a gap up on Apple. Good volume, right? We must have had a news event, right? I mean, if we're following Apple, we know it's the China Mobile deal. But what's been happening to Apple? It's been pulling back into this gap. Okay, I would expect this to be bullish. I'm looking, instead of looking to be a seller, I'm looking for a buy opportunity here. Okay, where does that come? Depends. Can we go all the way down to 540? Absolutely. But I'm looking for this gap to kind of act as support for Apple. In the same way as this gap here in September acted as resistance. Here's Apple, gaps down, right? So what happens? Apple falls and then rises. Okay, once it rises and fills this gap, we don't see buyers step in, right? We see a little bit of a sell-off. Okay, this one's flat. Something has to change for that gap to get filled, for that gap resistance to break. What changed? Well, you had Carl Icahn and his groups piling in, a lot of analyst upgrades. You just had a lot of different some changing factors going on here with Apple, but that gap initially acts as resistance there. Okay, so gaps, news events, they tend to act as support and resistance. Now, let's say you're a fundamental trader or you're a technical trader that goes by the idea that the news doesn't matter. Who cares? Who cares what the news is? It's all priced in. I should be able to see everything on my chart, so I don't really care about news. Okay, fine. You don't have to worry about the news, but pay attention to the volumes. Look at the elevated volume. And I'm not looking whether it's buy or sell volume. Okay, I could care less. Look at the elevated volumes. Okay, generally elevated volumes, okay, show where investors are really interested. Okay, where there's a lot of interest in the stock. Notice how a lot of that came in this 460 to 480 area. A lot of interest in the stock around this area. That is support. I mean, if Apple were to pull back to this level, yeah, don't think it will, but if Apple were to pull back to this level, it's kind of a no-brainer. Let's buy it here. Okay. Well, what happened later? Well, we got some heavier volumes right in here around 520, right? Some elevated volumes in this area. Okay. Well, this is kind of our next support level. We've had some elevated volumes right in this 550, 560 area. Okay. Can we use this as support and resistance? No, not yet, but we can identify where some of these levels are. Now, if you don't want to kind of look at the daily volumes and pay attention to that, there's a cool little indicator that you can use. Okay, and you can come down here below, and it's a overlay here on stock charts, and it's called volume by price. Okay, volume by price. I'll click update. And what it does is it puts the volume over here on the left-hand axis. It basically shows you where the highest volumes have been. So notice how we have mentioned between this 460, 480 area. Well, now we're seeing a little bit more exact. These elevated volumes, most of the volume trading has been in this 480 to 500 area, 480, 520 area. Okay, this is our major support. We have major support in this 480, 520 area. Okay, just some major support there. We're starting to build some volume up here into the 540, 560. Okay, The longer we trade up there, the more significant that level becomes. Take a look at this with Bed Bath & Beyond. Where's our support? I mean, you can see where most of the volume has happened. Right here around 77, between 76 and 78. That's our support level. Okay? That is absolutely our support level. Take a look at something like Pepsi. Okay. Do we have support and resistance based on volume? Not really. I mean, we have some support down here around 78, right? I mean, if Pepsi were to come back down here around 78, that would be interesting. But nothing really grabbing us. It's pretty much traded equally among the price ranges between 78 and 86. Okay. Boeing, for example. Boeing, do we have anything? Well, yeah, look at our volume that's been building here at this 135 area. Okay, been building there. So if Boeing breaks out, we would expect that over the course of 2014 for this 135 area to act as support. If Boeing breaks down, we would expect it to act as resistance. Okay, for now, we're right in this support resistance area. Now, if Boeing pulled back to 100, well, this is where we have most of the volume, at least based on this chart. Now, one of the mistakes that people will often make when they're using volume by price is they will just look at it from this context, just from a daily context. And they'll say, hey, it's nice here, and we have our support resistance level here based on this. Well, one of the things I like to do is change up the time frame. Okay, what does this look like now from a weekly perspective? Do we get a little different picture? Okay, let's take Starbucks. Do we get a little different picture? Take Disney. Do we get a little different picture? Okay. You'll notice here, because of the run in 2014, a lot of the strong support volumes were nowhere near. Okay, most stocks have run significantly above them. Okay, fine. Let's take Nucor. Okay, we're not as far away, right? We're not as far away. Let's take Chesapeake. Okay, you can see down here around this 20 area. Chesapeake were to pull back into the 20 area, that would be an interesting level. Okay, so it's not really going to give us a level for everything, right? I mean, it's not going to. I mean, Costco here, which is up nicely here today. Nice support down here around 75. But look, by the time Costco gets to 75, it does me no good. Okay, it does me absolutely no good. But it's a way to kind of look at it. It's a way to kind of understand where your stock is and where some of the heavy volumes have been based on stock price movement. Okay, so gaps, news, volumes, they all play into each other. All of them are really nice at marking support and resistance areas for stocks. Alrighty, so that's number 1 to 6. Now the next 3 factors are actually technical indicators, and there are thousands of technical indicators out there. But the 3 I'm going to show you are my 3 favorite when it comes to identifying support and resistance. Okay, they're my 3 favorite with support and resistance. So let's start here with let's put them all on. Okay, let's clear everything else out and our indicators. Let's just go put these 3. I'm going to put the Bollinger Bands, which is up under overlays. Then under indicators, I'm going to add a money flow index, an MFI, and I'm going to add a rate of change, an ROC. Okay. And you may notice that on some of my charts that I pull up, I oftentimes have the rate of change indicator on it. I rarely talk about it, but I oftentimes have it on there. And it really comes down to support and resistance. Okay. Now, the default parameter on the rate of change here is 12. Occasionally, I'll change it to 24. Okay, in fact, let me just add a 24 on here, and I'll just show you what that looks like. But let's start with the simplest indicator here, and let's just take Costco here, for example. The MFI. Okay, the money flow index. Think of the money flow index as the RSI on steroids. Okay, the money flow index, the RSI on steroids, basically adds volume into the RSI indicator. Okay, which I like better than the RSI because of that. Okay, anything above 80 on the MFI, anything up here above 80, overbought. Anything below 20, oversold. Okay? Above 80, overbought. Below 20, oversold. And so generally, when we hit an overbought area on the MFI, okay, the danger of a pullback grows. We're probably starting to near a resistance area. Okay? Probably starting to near a resistance. When the MFI dips below 20, we're probably nearing a support area. So we basically have support and resistance based on the MFI. Now, one of the problems with the MFI is we don't see the support and resistance areas. They don't come in all that often. We'll maybe see 3 or 4 over a 6-month period. Okay, but these are important areas to kind of keep an eye on. Notice here how the MFI went above 80 right here when Costco's price was 118. The stock dipped, went back above 118, but still resistance, right? It's not that the MFI necessarily is going to call the top right then and there, but it's going to mark a resistance area for the next little while. Okay, the next while it marked this resistance area, for a good period of time here on Costco. Now what's happened? What was resistance is now turning into support. Right? I mean, we broke resistance. Notice the good volumes to do it. Probably a fundamental event. Good volumes. Now we've pulled back into this resistance area, into what was resistance. Now it's acting as support. Okay, so the MFI, the most basic, probably the easiest to kind of grasp when it comes to support and resistance. Now the next indicator here down below here is the rate of change. And the rate of change is just that. It measures the rate of change or the acceleration of a stock. In a lot of technical trading for many years, it was kind of a first derivative world. What do I mean by that? Well, you basically looked at which way the indicator was going and said, okay, the indicator is going up. Let's say for the MFI. The indicator is going up here, so the stock is positive. We can be buyers because the indicator is rising. That would kind of be a first derivative world. We're taking an indicator and looking at the direction, okay, the direction that it's going and saying, okay, it's going down. That's negative for the stock. But what's happening with technical analysis as it evolves, and over the last 5 years, we've seen a lot more of this, is it's becoming a second derivative world. Now, what does that mean? Well, if you think, for those of you who have had any calculus, and I've had, a little bit. I'm no calculus expert, right? But a second derivative is really the rate of change or the acceleration. It's not if the indicator is going up or down, it's how fast the indicator is changing. So if the indicator is going down, but it's slowing down, we're probably hitting a support area. If the indicator is going up and going up faster than what it has been, we're still on a really good trend. But even though we're going up a little bit later, if we're slowing down on our way up, we're probably nearing a top. Okay? And just think of it as you're in your car, right? You're in your car, you see the stoplight ahead. Okay? You're still going forward till you get to the stoplight, but if you see that stoplight's red, you're going to start to slow down. And so a lot of times as stocks hit support or resistance levels, they'll start to slow down. They'll just start to slow down in there. Now what happens? The light turns green, ready to go. What are you doing with your car? You're going from 0 to 30, 50, okay, whatever it is, but you're accelerating. It's not that you're just going 45 the whole way. You're going from a stop point, you're accelerating. That's kind of your rate of change. And the rate of change indicator is one of the few indicators that really kind of brings this out, this whole acceleration deceleration factor. Okay? Now, you'll notice I have two rate of changes here. One is for the last 12 days, the other is for the past 24 days. Why do I care about the rate of change? What is it? Well, I'm looking at it because notice how when the rate of change has come down here to about -5 on the 24, or down here to 5 on the 12, anytime the rate of change has come down to this area, we've seen support start to build in the stock. Okay? We've seen support start to build. And we're starting to see that now. Okay? So while it doesn't always show support or resistance levels, the rate of change, because look, the stock price here on Costco in August, very different than the price now. But the rate of change is showing some support. Let's take a look at it with another stock. Let's take Tesoro, for example. Okay. Anything here on the rate of change? Well, look at this. Notice here on the rate of change how as Tesoro's coming down, notice what the rate of change is doing. The rate of change is actually going up. Okay, so we have divergence. Okay, we have divergence. We have the indicator going a different way from the stock. Notice how once we have volume really kind of come in, the stock reverses direction. Okay, so a lot of times the support or resistance level isn't going to be marked here on the rate of change necessarily by -20 or like we saw with Costco -5. That's not going to mark support. But we know support's starting to come in because we actually see the rate of change going a different direction. And that tells us, hey, you know what? There may be a change in the wind here. There may be a rebound to the other direction as we go forward. Okay. Rate of change recently for Tesoro has been going down. This is one of the things that's kind of concerned me about Tesoro, and whether it's ready to kind of fully break out yet. Okay. Truth be told, I actually bought a spread on Tesoro here today. I rarely will mess with spreads, but I did go buy a call spread on it. And I'll show you that a little bit later. But overall, that's kind of one of the concerning factors is the rate of change is still falling. Okay. Now, can we argue it's down near a support level? Sure. We can, but the rate of change is going to kind of help us to see, where some of these sell-offs, even though they're at different prices, can reverse or where they can change. Okay, take Chesapeake Energy here, right? Chesapeake Energy rate of change -10. That's where it found support here in June. Down here around 20. Well, Chesapeake's nowhere near $20. It's up here at 25. Notice how the rate of change down at the same level, -10. Now the stock finds support. Even though the prices are different levels, the rate of change is the same. Okay, and so that can give us a clue that, hey, 25 is going to act as a nice support area. So that's the MFI and the rate of change. Now, the Bollingers, which you see us use a little bit more often in regards to Trader Minute, we talk about them much more often. Okay, the Bollinger Bands are really simple, and essentially they're like a moving average envelope. Okay, they're kind of that same concept that we looked at before. And the typical Bollinger Band, this middle dotted line, is a 20-day moving average. That's all it is. It's just a 20-day moving average. Okay? This dotted line here. Now what's drawn above and below, we're not just drawing, like we did 5% away or 7% away. What the Bollingers are doing is they're taking into account the prior price action and drawing them 2.5 standard deviations away. Okay? Now, standard deviation, what does that mean? Well, theoretically, it means that 95% of the price action should lie in between the upper and the lower Bollinger Band. Okay? should lie between the upper and the lower Bollinger Band. In general, when Bollinger Bands are contracting, they are most likely to act as support or resistance. When Bollinger Bands are expanding, they are most likely to indicate a trend. Okay. So if we're looking for support and resistance, we want to kind of use this when the bands are contracting. Okay. So right in here, July through middle August, what's happening to the bands? The upper band and the lower band. Well, they're getting farther and farther apart. Okay, they're expanding. Well, that's happening because the stock's making a nice little trend or nice little move. Now what happens? Well, the stock stops moving as much. What happens? Bands are contracted. Now they're acting as resistance. Bands are contracted here. Now they're acting as support. Okay. So these bands contracting are going to act as support and resistance much more than expanding bands are going to act as support or resistance. Take a look at Bed Bath & Beyond. Okay, what's been going on with the bands? Okay, all right, they expanded for a brief period in September here when the stock shot off of its lows, but ever since they've been in a contracting mode, and every time they've come down to the lower band, they found support, the upper band, they found resistance, until recently. And now what's happening to the bands? They're starting to expand. Okay, similar to back here. Okay, bands tight here in June. Okay, what happens when they start to expand? The stock starts to make a run. Stock starts to make a move. Okay, doesn't necessarily mean it has to be smooth, but yeah, this is indicating more of a trend. I'm not going to expect that the bands are going to act as resistance as they continue to expand. But as they're contracting, like here in August, yes, I'm going to expect that they act as a little bit of resistance or act as support. Okay. The Bollinger Band's fantastic indicator, as far as understanding the environment of an individual stock. Take a look here at Apple. What's been going on with Apple? Well, the bands have been contracting, right? And so what does that say? Well, lower band should act as support. Upper band should act as resistance. Okay. Notice how kind of came in here, October, November. Upper band resistance, lower band support. Okay. Then it breaks out, pierces the upper band, off she runs. Okay. If Apple were to come down to this lower band, that'd be a fantastic support level to be able to play off of. Why? Because it's filling the gap and coming down to the lower Bollinger Band. All right, so these are our first 9 factors. Rate of change, Bollingers, MFI volume, gaps, moving average envelope, moving average trend line price. So which one do we use? I mean, which one of these factors is the best one to use? Well, when I'm looking at support and resistance, generally, I would like to see 3 of the factors in play. Right? Because not all support resistance levels are going to be marked by the MFI, or marked by the Bollinger Bands, or marked by the price, or marked by a moving average. But most support and resistance levels will have some sort of combination of these. And if we have 3 or more factors in play, that becomes a much more reliable support or resistance level to play off of. Okay? When we only have 1 factor in play, that can easily break. That can easily, it's not going to take much for that level of support or resistance to change. But when we have all the factors in, when we have 3 or more of the factors in play, we have a much more reliable level of support and resistance. Now you'll see number 10, and I'm not going to delve too much into number 10, but oftentimes we will see candlestick patterns emerge around support and resistance. Okay, we'll see a stock move lower. Let's go to Costco. Okay, we see a stock move lower. Okay, down at support in the lower band, MFI below 20. Okay, our rate of change down in the support area. What do we get off that support level? We get a bullish engulfing, a very strong one. Big volume, okay, off the 112 level. There we are reversing off the support. This is an area where the sellers have run out and the buyers have said, let's step in. Okay. So we have several factors here, not just one, not just two. We have multiple factors, and the more factors we have, the more reliable that support and resistance level is. And oftentimes, some sort of bullish candlestick pattern will mark support, while some sort of bearish candlestick pattern will mark resistance. So we'll see some sort of bearish pattern. Take a look here at Bed Bath & Beyond. Shoots up to 78 and pulls back. Kind of gives us this black candle here that has now marked resistance going forward here. Okay. Now you'll see resistance is finally breaking. That's very bullish. You know that the stock is ready to move or ready to go on some sort of trend. Okay. But these are the 10 factors, support and resistance, that really help to understand where your stock is relative to these levels. What's the biggest problem with playing support and resistance? Okay, why do many traders, they like to talk support and resistance, but they struggle with trading it? It's patience. Okay, it's patience and understanding that you got to wait for these levels to hit. Because there's a tendency with technical analysis to want to try to predict the direction of all stocks, right? We want to be able to look at any stock and say, which way is it going to go from right here, right now? Well, support and resistance isn't about that. Support and resistance is about understanding the area where you can be a buyer or you should be a seller, okay? Some people, there's two ways to play support and resistance. Some, like to sell at resistance and buy at support. Okay, logical, right? Makes sense. Look to sell at resistance, buy at support. Others like to buy on broken resistance and sell on broken support. Okay, so Bed Bath & Beyond right here, breaking resistance. We have all these resistance factors in play between 78, 79. It's breaking resistance. Some traders like to buy that. While other traders would say, you know what? I'm shorting it here at 79. If it starts to break above 79, I'm going to get out. Okay, they like to play the resistance and be a seller at that level. Okay, both ways you can do very well. Okay, whether you like to sell at resistance, buy at support, or whether you like to buy at broken resistance and sell on broken support and play for the major trends. And then you can also do a combination of both. But understanding where these support and resistance levels are, perhaps one of the most important factors when it comes to setting up quality trades. Alrighty, well, thanks for hopping on. I will be back here in about 10 minutes. We'll start breaking down some indicators a little bit more. But any questions you have on the support and resistance, don't hesitate to ask. Jeff at TraderMinute.com. Happy to help you out, and we'll talk to you later. Take care.